Welcome to Markets Now. I'm Michelle Rook along with Tomm Pfitzenmaier with Summit Commodity Brokerage. We're seeing a lot of green on the board today in both grain and livestock futures trade. And Tom, I want to start off with the green that we've been seeing over in the grain side of things. First of all, we had higher weekly closes last week in corn and soybeans, and actually a higher weekly key reversal, I guess we could call it, in the wheat market. And do you think we can keep going here? I think that's the big question. And are the lows in?
Oh, I think there's a good chance the lows are in, unless there's some huge bearish surprise in that report on Friday. But like you said, we'd had a very nice close on Friday, a little follow through buying again this morning. There's some concerns in the wheat trade about this Black Sea export corridor being closed. The Russians stepped up their aggressiveness against Ukraine over the weekend. So the odds of that opening aren't great. So which means any grain that moves is going to have to go over land, which is not ideal, obviously. You still have the drought potential in the plains, maybe more than potential. I mean, they did get some rain last week, but they need ongoing rains and not just an occasional rain from everything I read. So I mean, there's positives going on in the wheat trade. You've got a drought going in North Africa, which a lot of analysts are keeping an eye on. So if you start to see this wheat market and wheats, the funds are heavily short wheat. So if you start to get some short covering there, that could certainly help boost wheat back up. I think you could see July wheat back up over $7 if briefly, if for no other no other length of time, but things need to kind of go right this summer. And if wheat goes up, I think you're going to see it drag corn along with it.
Yeah, no doubt. And it already has, obviously. And we now have funds actually short in the corn market, don't we?
Right. I mean, I don't know. I personally don't want to be short corn going into the growing season. I mean, it's just a bad idea. And I'm not predicting what can go wrong, but there's things that go wrong. The El Nino isn't like as powerful as people thought it was going to be, so that lean or makes it possible you could have a drought situation. We still don't know exactly if there's going to be some prevent plant acres up in the northern part of the country. I mean, what's been planted in the Central Corn Belt is obviously in good shape. You had rains, things are starting to warm up. The expectation that this afternoon's report's going to show that 50 to 55% of the crop's been planted, so that's all good. But again, funds are short. You're heading into a growing season that could potentially have problems. So you've had good basis on the corn. If you really need to make some sales, some old crop sales, maybe use these recovery rallies to clean that up. But I wouldn't get in a big hurry on new crop yet, I guess.
What are you thinking about soybeans? Obviously, we've had, a good run there with demand still holding in there pretty strong here on the crush side of things. So do you anticipate that's going to kind of continue or not?
Yeah, I mean, if there's a bullish surprise in Friday's supply demand numbers, it could be in the old crop soybeans. I mean, the demand for them has been quite good. And I know they're talking about some imported soybeans coming out of Brazil, and that may be impacted a little bit, but that's usually pretty minimal. And we've got this competition out of Brazil. And, their basis levels have been dropping as you get harvest pressure, but that's stopped. They've started to firm up a little bit, which is a sign that the harvest pressure is probably behind us now from that crop. So, there's a potential in beans also. Now, funds are still long beans, not nearly like they were, but they are still long. So, I mean, they could come back and increase their ownership of soybeans. Now, the short bean oil, which seems a little dangerous given the biofuel demand we're going to have for bean oil, but that short covering there could be supportive of the soy complex as well.
Yeah, at least we held the March lows, though. That was really critically important last week in the beans, wasn't it?
Right. Yeah. I mean, I don't know that we're going shooting up higher here, but I think we've at least gotten the beet market so we can go back into a trading range.
Right. So let's talk about the WASDE report coming up here on Friday, Tom. This is a big one. We have a lot to sort through. Acres yield. The big question, though, you say is really going to be what USDA does with demand.
Yeah, I mean, acres, they're just going to take those March planting intentions numbers. They're going to use the number from their ag forum outlook for yield. So that the production side is pretty well known. What we don't know is what kind of adjustments they're going to make on demand in terms of exports. There could be another downward adjustment in the Argentine corn and soybean crops, which would tend to be supportive. So that report, well, it's the first one for the new crop that includes everything. So that report tends to make markets move. So I'm not predicting what direction they're going to move, but it does generate some market movement. So I guess if you get a good strong rally this week, maybe you look at some cheap puts and put a little floor underneath yourself for some protection, and then hope that the volatility ends up in your favor and makes for higher prices.
Yeah, because even if you have a bullish old crop scenario, the new crop could be showing bigger inning stocks for this next year. And then what wins out?
Right. Plus,
yeah.
Plus, I mean, we have to consider that production is increasing every year in Brazil.
Right.
And you know, if you bump that another 5%, then that just increases the competition there. So that's what makes the USDA's assumptions kind of interesting, how they factor that all in, which has the potential to be friendly, I guess, if they don't add that much demand and sort of minimize the Brazilian impact.
Absolutely. So what about the cattle market? We're seeing a little bit of follow through strength here this morning after a higher day on Friday, but we had lower weekly closes last week. So that and lower cash trade, do you think we can kind of turn the corner here? We kind of have to hold the lows from last week on the futures perspective, don't we?
Well, seasonally, you tend to bottom the cash market out here over the next couple of weeks. We did have a pullback, which corrected whatever overbought situation there was in the cattle. And I'm anticipating a little weakness in the cash market, a dollar or two lower in early trade this week. So, yeah, we've had a pullback, we've had a consolidation. However, the numbers continue to be supportive. Demand continues to hold up quite well. So. You might see a little more break in the cattle, but I don't think you'll see a lot, and you could certainly see spot the June months bounce back up over 165 here pretty easily, I think.
Yeah, especially since it's holding all these contracts are holding a good discount with the futures to the cash trade.
Right.
What are you
right.
expecting about cash this week? Do you think we can stabilize this week anyways?
Well, that's why I say I think the first of the week here we may see another dollar or two lower, although you don't, early in the week you don't see a lot of trade.
Yeah.
So I guess I'm looking for a little bit of weakness, but not a lot.
So the other thing that has been kind of impacting that market is maybe a few jitters here over the banking situation and the macroeconomics. And do you think that's just going to be kind of something that the market's just going to kind of look over its shoulder and watch here as we go forward yet?
I think that was a negative for both the grain and the livestock
Right.
last week. That regional bank scare really shook everybody up midweek last week. Now those regional banks bounced back sharply on Friday. I think that put a little optimism back into the grain and livestock markets. They seem to be stable this morning. So if that's the case, that negative will be gone from the market, and we'll be back to trading good old supply demand fundamentals. So and if you look at those, it's fairly positive in the cattle and really positive in the hogs.
Yeah, it is. Although we had a tough down week last week, we were down like $8.50 in the June contract, and
Right.
I know right now we have sow liquidation was a bit of a concern to the market yesterday, but as you say, a lot of the other fundamentals are starting to be more positive. So do you think that we're trying to carve out some sort of a bottom here?
I absolutely do. I mean, there's one negative in the hog market, and that's the domestic demand's not very good. But I was going through the list this morning. The cash market tends to put in seasonal lows this time of the year. The funds have a large short position, so if anything happens to spook them out of that, that'd be positive. Slaughters below last week. the previous week, excuse me, and below last year. Weights are down $2 versus last year. Exports are at a 3-year high, and we're deeply oversold. So there's a lot of good things happening in the pork trade. Wife and I bought a pork loin for like a big huge pork loin for like $11 last week. So I mean it's pretty cheap eating and pretty high quality eating, and I think that should come along and helps shore up that domestic demand that's been kind of a problem. So I don't know. It's hard for me to get bearish.
Yeah.
Maybe you'll see the Mayhogs work their way down to 75, which is only 80 cents below where we're trading right now. But I don't see it going much lower than that.
Yeah, the futures premium to the lean hog index, it feels like the market is waiting for that to catch up here before it really takes off, though.
Yeah, and it will. I think it will. So yeah, just matter of being patient.
Okay, thanks so much for joining us, Tomm Pfitzenmaier with Summit Commodity Brokerage, and that's Markets Now.